This channel is supposed to be different. We try to do things differently on this channel than anybody else. And one of those things is we look at the general economy and to the general conditions on the ground because that impacts Tesla and Tesla stock. If you don't understand what's going on in the world and in the general economy, it's very hard to understand the directionality of Tesla stock fully. The more information you have that the other guy doesn't have, the better chance it is that you're going to be able to make the right call with regard to your stock purchases or sales or options plays or anything else. So tonight, I want to start here. Gold is at all-time highs tonight. So is silver. Now you can add to that list all three major stock indices on Friday. We're at or very close to all-time highs. I can't remember exactly. Bitcoin over the weekend hit its all-time highs, and it's expected to continue to go. Ethereum also hit its all-time high, and it's considered likely to continue to go higher. Home prices, even though they're off just a little bit right now, for the most part, home prices are at all-time highs as well. Now, the dollar on the other side of the coin is off by about 10% or so this year. If you do a basket of currencies that just has some of the major currencies in it. But longer term, it's pretty much in a very normal spot. So if you're looking at from January 1 until now, which is just an arbitrary date, so if you're just talking about what's happening so far this year, or if you're doing it from its high, yes, it's down about 10% or so. But if you look 1 year back, or you look 3 years back, or you look 5 years back, you'll see that this is kind of in a normal spot. It's not a lot higher or a lot lower than kind of where it's been. And then if you take a larger basket of currencies representing most of the major currencies around the world, now you'll find out it's only down about 7% year to date. And in fact, if you go back 1 year, it's almost identical to where it was a year ago. Okay. What else? What else is going on? Well, almost no jobs are being created. Shocking, right? Oh my goodness, that's just a horrible thing. Now, the Mag 7, as compared to the rest of the S&P, they're higher than any group of stocks like this has ever been in comparison to the rest of the S&P. I mean, it's crazy. It's just like out of sorts. Now, there's been a couple of times when it's been similar, but those have been bubbles, which might burst. And then who knows what would happen to the markets. And then we've got the U.S. debt. The U.S. debt is at peacetime highs, and the deficit is way up. And, some people don't see any chance that deficit's coming down. Then we have all the chaos around the tariffs, around the ICE raids, and all the criminal activity around the country right now. Aren't you worried? Most posters on X, you'd see a lot of these, not most, many posters on X, they're very worried about these stats. They're telling us that we should, probably dig a bomb shelter or something if we don't already have one and go down and hide and just be worried about the future. The truth is, we are in wildly uncharted territory. I mean, we're in territory, nothing like this. I mean, you can say, well, Randy, it's always different. It's always, there's always change going on, and it's never like it was last time. I mean, if you're in the middle of the Vietnam War, the middle of World War II, or you're having the, dock strikes and all the problems with OPECs and oil, you lived through and actually got to sit in lines to get gasoline back in the day, there's always all, no. In my 77 and a half years, by far, this is the most unique, crazy time that we've ever been in. I mean, we've got a wholesale, let's just go down a quick list. We have a wholesale restructuring of international trade taking place. How often has that happened in your lifetime? Oh, never? I mean, sure, after World War II or during World War II and after, the United States was in a new position with regard to international trade, but it wasn't like we sat, well, we did. We sat down and we said, we've got to help the rest of the world because we're the only industrial nation left with an industrial base. And we had the China thing, that was kind of a reset. No, this is huge. What Trump is doing in terms of resetting the international trade situation is very, very big. Then we have a massive reshoring of industry for the United States. Nothing like this ever before, where there's an intentional effort to bring back trillions of dollars of business to the United States and to build trillions of dollars worth of infrastructure, buildings and equipment and manufacturing facilities. Nothing like this. Nothing like this ever happened. Okay, now how about digital AI? How about what's happening with regard to the AIs, the way that we're getting information and able to cure diseases and make decisions about how to build products and whatnot? I mean, the AI thing, we're just at the very beginning. I like what Chairman Powell actually said. I think he called it the tip of the spear. We haven't seen anything yet compared to what's going to happen with digital AI. But if digital AI is a big deal, what about all of the real world AI, the robotaxis, the humanoid robots? All of that is going to just be, I think, Larry and I discussed that this morning, and Larry thought that it was probably close to being equal. Maybe it's a little bit more on the digital side. I think it's a little more on the robotics side, but it's either one. It's going to be so disruptive. It's hard to imagine how disruptive those two products are going to be, plus other autonomous products that are going to be coming as well. Then what about all the massive buildup by the hyperscalers? Nothing. There's never been anything remotely like this. Sure, building out the railroads was huge, and it might be a comparison. Building out the telephone system was huge. Building the road system across the United States, building the freeway system that Eisenhower did in the 50s, the beginnings of that. I mean, yeah, these were big infrastructure projects. But in terms of the speed and in terms of the dollar volumes that are being spent, no, this is going to be bigger than anything ever. So it's just one more thing to throw into the pot. And all the while, we have a demographic reordering. Now listen to me. We have a demographic reordering of everything in the world that is creating potential benefits, but also lots of challenges. And that actually is my subject tonight. All of the rest of that stuff is wild and crazy, and it's impacting everything that you do. Every investment that you would make is all being impacted by all the stuff we just discussed. But now listen to this. If you're going to understand the market, you've got to pay attention to demographics. And right now, it's the boomers' world. Yeah, it still is. Has been since the 50s, 60s, when boomers first became adults. Even when they were teenagers, we boomers were really kind of, because of the size of our generation. But as what's happened is over the years, luck or just persistence or who knows what, the boomers now continue to be ruling it all, because the baby boomers right now hold approximately 52% of total U.S. wealth. Baby boomers, just the boomers. That's not the 55 and over. We're talking about the 64 and over. Hold 52% of total U.S. wealth, amounting to $78.5 trillion. Wealthiest generation in history, obviously. Number two, the wealth is heavily concentrated in stocks. 54% of the holdings of the baby boomers is in stocks. And the rest, almost all of the rest is in real estate. 42% is in real estate. Now that exposes the economy to volatility because of those two asset classes. Then we have the boomers owning their own homes outright, or they have 3% mortgages with huge equity, because very few boomers bought their homes over the last 4 years. So they've bought them back they've refinanced when the interest rates were really low. Boomers drive $548 billion in annual consumer spending, the highest of any generation. That fuels corporate profits, supports elevated equity market valuations, and it is the driving force in the consumer economy. Now it says, despite, number five, this is all, by the way, Grok and I having this conversation. Despite the wealth, boomers have the lowest average savings rate of only $4,059. Now that was back a couple of years ago. Maybe it's higher now, but they actually are relying on drawing down assets to sustain their spending. Well, okay, so if you've got homes and maybe more than one, where you have income coming from real estate, you've got your Social Security, got your pension, you've got money that you've additionally set aside into stocks, bonds, or other kinds of investments that have earnings that are coming in. You don't need to have a lot of savings. Now, I would call every one of those savings, wouldn't you? Number 6, projected spending growth for boomers is modest at just 1.7% annually through the next decade, contributing to sluggish overall economic expansion, where we only see, some people think it's only going to grow about 1.5. I think it's going to go way faster, but it's not going to be because of boomers spending money on stuff. You see, because boomers spend money on experience, they spend money on healthcare. They don't spend money on stuff. So you got to be very, very careful about, investing in things that are atoms. You need to be investing in things that are experience and or things that are electrons. Number 7, the great wealth transfer is going to shift 84 to 124 trillion from boomers to younger generation and charities over the next 20 years. This is equivalent to 3 times the US GDP will be transferred to the young folks. Number 8, of this transfer, 106 trillion is expected to go to their heirs, primarily Gen X, millennials, and Gen Z, while 18 trillion will go to charities. 9, the transfer is accelerating is already accelerating. This transfer is already happening because people are giving while living, are giving with a warm hand rather than a cold hand, as I like to call it. I've already done it. Maybe you have too. I've already given away a substantial amount of money to the kids, and still am actually to the college age kids, the grandkids. So this is it. People are going to be increasingly passing these assets to children and grandchildren through their existing income rather than waiting until they've passed away. Number 10, already underway, 55% of millennials and 41% of Gen Z expect inheritances within the next 5 years. 55% of millennials expect an inheritance within the next 5 years. Younger inheritors plan to invest 60% of received funds, but only 72 believe traditional stocks and bonds can deliver above average returns. So you know where they're going to go with the money. They're probably going to go into Bitcoins. But anyway, the younger inheritors, a huge percentage of this group is going to be receiving money, they believe, in the next 5 years. A key shift, 82% of investors aged 21 to 43 prioritize ESG factors in their decision-making versus 35% of those poised to spend their money in mainstream to mainstream sustainable investing across all markets. Number 13, 51% of younger recipients intend to use inheritances for debt repayment, like student loans and mortgages, easing financial strains and boosting disposable income. So you can imagine how good that's going to be. Number 14, inherited wealth could elevate millennial homeownership rates, increasing housing demand while also adding supply from boomer downsizing and or dying, let's face it, stabilizing prices but raising transaction volumes. Number 15, real estate remains a core stable asset across generations, with transfers likely emphasizing energy efficient properties. Number 16, the transfer, that's Grok jumping in there with his liberal nonsense. Nobody's doing that. Nobody. Number 16, the transfer exacerbates wealth inequality. It's going to possibly mean that people that are getting this money, a lot of them are already well-to-do, and they're going to be getting it from the top 10 of the boomer households are going to pass down the majority of this money. So the top 10 are going to be the top 10. Although, it's going to be broader than that, believe me, because lots and lots and lots. The average retired family today has a net worth of over $1 million. The average. 17, boomers' retirement prompts a great sell-off, with trillions shifting from equities to bonds. And that could potentially pressure stock prices as these boomers start moving into more conservative investments. Number 18, the reallocation is a gradual due to boomers' 18-year age span offset by institutional demand. And that is going to shrink public equity supply. And there's only 3,700 companies now on the S&P 5,000, or what they call the Russell. Anyway, there used to be 5,000 or close to 5,000. Now there's only 3,700. Boomers' unusual tilt towards stocks over bonds right now, shaped by strong market returns during their careers, could drive massive bond buying in downturns, and that would lower yields and enhance their hedging role. Number 20, a 10% asset price drop could trigger psychological effects, slashing boomer spending and spiking savings rates, risking a deeper recession if we had like a big, just a regular major downturn in the stock market, like 30, 40, 50%, which usually is, pretty bad recession. I don't see that happening in the next 5 years. I really don't. Overall, last one. Overall, boomer wealth underpins current economics, reflexivity. High spending boosts profits. It justifies the valuations of these corporations, but its erosion and volatility could break in its loop, and that might amplify a downturn. Anyway, the total spending power of households, baby boomers spend by far the most, 5 to 6 trillion annually. This dwarfs the younger cohorts. Gen X only spends 4 to 5 trillion. Millennials only spend 3 or 4 trillion. Gen Z is only spending 1.52. So you can see how massive the impact of the boomers still is. And then you go on down. Let me see here. There's one more thing we wanted to talk about here. So boomers tend to prioritize experiences and necessities tied to retirement and health, spending more impulsively on travel and gadgets while remaining thrifty overall. Younger generations focus on digital, sustainable, social experiences with higher allocations to apparel, beauty, and online goods. And so there's a very big difference in how everybody's spending. And of course, the young people, a higher percentage of their income is going to groceries and regular day in and day out expenses, because older folks, those expenses have gone down. And of course, and then the more middle-aged, the kids are like 30 to 50, they've got all the expenses of child rearing. So there's more. There's so much good stuff here, but I don't want to go on for hours and hours. Let's see. In summary, boomers fuel the economy through high volume, experience-focused spending on travel and health. Younger cohorts drive innovation in digital with sustainable and value-oriented categories, reshaping markets towards personalization and ethics. I don't know. I don't see the ethics in the, never mind. So what's my point? I don't find it shocking at all that boomers in the US and even around the world who have amassed huge amounts of wealth are willing to be a bit more aggressive with their dollars in equity, gold, silver, Bitcoin, etc. In the meantime, the 20 and 30-something feel like they missed out on real estate and equities, so they're heavily invested in crypto, hoping to drive that up. I see so many people on X who have no plans to spend their stock or their crypto earnings for years into the future because they just don't need them. They've got enough stuff. They've got enough experience. Everything's doing fine. So they just keep investing. And again, that's going to drive all these asset classes up. Now, I'm not going to try and guess the societal issues that are currently happening or that might develop out of all these changes that are happening, because there's too many. The younger generations are about to inherit these huge amounts, but prior to that, there seems to be a lot of envy and anger at the boomers in these younger generations. Meanwhile, there's millions and millions of boomers who are doing just fine, and I'm happy for us. And I'm optimistic enough to think that the future generations will do fine in their own way, and that AI is seemingly going to make everybody richer than we could have ever possibly imagined. Let me know what you think of what I just talked about. Did it make sense to you? Is it interesting? Would you like me to do more of this? Because I have a lot of these kinds of interest areas that I could do these kind of programs on. We are now up $5.64 in the overnights on Tesla. And let's see what happens tomorrow with FSD breaking. And then what happens on Tuesday night with the secret stuff that that's going to be revealed. That's all I got for you right now. It has